Don't hate the player, hate the game. This guy is taking advantage of a situation where everyone is trying to make money because everyone's lying about how much they have and what they're doing, and it looks, oh my God, I can do this too. And people are broke, people are gambling, and gambling increases in gambling are signs of a recession coming. But here you go. First thing I saw today. Are you guys ready? Okay, here you go.
Yo, Aristotle, can I ask you a question? So if you were to start over again, how would you spend your first 10K?
Good question. Good question.
Okay, first of all, we're calling him a millionaire. He's in a Cybertruck in a mini mall. I'll leave that as it is. Weird place for a millionaire to be hanging out and giving advice. But either way, let's see what Aristotle would do with his first $10,000.
Yo, Aristotle, can I ask you a question? So if you were to start over again, how would you spend your first 10K?
Good question. Good question. So if I was investing 10K all over again, knowing what I know now, number one, I would take 10,000. I would use 7,500 of that and put it into option leaps. So
if you started out with only $10,000 in the market, not fund your IRA, not get your 401k started, not get your, no, $10,000. Here's what we're gonna do. We're gonna take 75% of it and we're gonna put it in options. Okay.
2,500 into 3 option leaps, right? And those are gonna go.
Which option leads? Let's hear.
All right, so I'm gonna buy these on the dip. I prefer the stock to be about 50% down.
What? Buy them on the dip? I prefer the stock to be 50% down. From where? In a day? If your stock is down 50% this year in this market, I'm not sure that's the one you want to go with. But here, let's hear them out. Let's hear them out.
And then they have good cash flow, good revenue, and good net profit.
Then why the fuck are they down 50%? Wait a second. They've got good cash flow, good net profit, good revenue in a massive bull market, and they're down 50. Okay, let's let them cook. Let's let them cook.
Growing year over year. So that's what I would do with the 7,500.
And if you're brand new, how the fuck do you read a balance sheet? What is good to you?
And I'll take the last 2,500 and I would day trade in the midst of swing trade, right? So let's just say I'm using a cash account. So with a cash account, and then I will do the 20/20 rule, right? So if I got 2,500, every finger is $500. I
had a woman in Vegas tell me the same thing once. You want me to put them where? Every finger's 500.
Put 500 and I'll try to make 20% off of that. So 500.
All right, so here's what we're gonna do, guys. You don't know anything about the market. You're gonna take $7,500. You're gonna find a company that somehow has great cash flow, great revenue, great net profit, but is yet down 50% in a bull market. And you're gonna buy leaps on them. We're not gonna tell you in the money, out of the money, what expiration, but just do that. I don't know where those companies exist, but you're gonna do that. Then you're gonna take the rest of your money and you're gonna day trade $500 at a time and get 20% each time.
Is 20% of 2,500, $500, $500, $500, $500, and I would day trade and swing trade with that 2,500, and I would try to keep 80% of my cash at hand at all times. So that's the good risk management play. So again, that's how I would invest my 10,000 if I had to start all over again. And last but not least, I would
keep 80% in cash, but make 5-day trades, but hold it to 20%. So what if it doesn't get to 20%? Do you sell it? What if it falls, but you keep 80% cash? You can't average down. Okay, so every trade is going to be a 20% winner. Okay, and all we're going to do is we're going to take 5 $500 trades, and we're going to hit 20% every single time. Okay, got it.
Adding to my portfolio, all right? So I would possibly put in about $400 to $1,000 a month into my account, so that way I can get into more leaps and I have more money to leverage, and I can use margin so I can borrow again.
If you're 80% in cash, why are you using margin?
Against my money and double my money. So that's how I would invest my first 10K. If you want to learn more, come and try.
You don't get it? That's why you're not a millionaire? Stop writing trial in my chat. It's not, no. Stop that. No, stop. No, exclamation point trial is not a is not a command here. No, stop it. Trial is not no, this is not how this works. But do you understand that there are people out there, and can I be honest with you? The largest demographic of new people watching my stream and wanting to learn this stuff is people from the black community. This is true. This is a big inflow of people because there are a lot of influencers out there that are teaching this, and it's like, hey, I want to do this too. It's a new demographic that's being brought into this, and this scares me because this is insane. I got to be real with you. I mean, this is crazy that this guy probably makes a lot of money from this because he sounds like he knows what he's talking about because he uses a lot of keywords, but. You got to talk to people and tell them the truth about how this works. Remember that guy who came in here and is like, you fucking do, I make 1% every day. Okay, what? That's the same person who's going to panic when the market's down. But here's what I'm talking about. I could tell you all these keywords, but then I have to tell you the risk associated with them. Did you say black people scare the shit out of you? No, I said this thing, this new group of people are coming in and they're getting told bad shit, and that scares the shit out of me. Y'all aren't gonna get me on that. What thing you buy? What do you mean by this thing? This thing has a name? Yeah, it's called scamming. But people will believe this because if I tell somebody new, hey, listen, you got $10,000? Here's what you're going to do. You're going to take $7,500, you're going to buy leaps on a company that doesn't exist. And then you're going to day trade $500 a time. You're going to make $20% a pop. That's $100. Do that 5 times a week. Minimum $500, right? You're going to take that, you're going to put it in your long-term, buy more leaps. That's going to turn into $100,000 easy. Eventually, you're going to scale up. If you want to learn, $200, I'll teach you. Well, to most people, $200 is worth the investment to turn 10,000 into $1 million. It's exactly what I did with mirror leaps. No. Hold on. I didn't tell anybody to buy that shit. I told you I was buying this company because of XYZ and because of this and that and that, and I think this is it. And I even took motherfuckers, you're not putting this on me. I didn't tell anybody to do that shit. You don't have to pay for that, okay? You don't have to pay to lose money here, okay? You get it for free. But did you buy 3 tranches of $2,500 mirror leaps? No, I bought one $2,500 block of mirror leaps, but I legged in. Really? It was already up 40. I'm already up 40%. Thanks, Stocky. No. Oh my God, you motherfuckers! Y'all are not getting me on this shit. You're not putting me out on like this. Stocky. Speaking of courses to join. What do you think about this one? What is this one? A woman's trading group? What does she got up there? When I'm researching a company and I want to get into it's a video. My bad. Let's see what this is.
So when I'm researching a company and I want to get into a trade, and then I see something like this, I'm gonna go.
You mean capitulation? You mean a sell-off or a red candle? What do you mean by when I see this?
Go to ChatGPT and Google what happened on this date, which.
Is this real? This isn't real, right? There's no way that people are paying for this, right? First off, if you're paying to go here and they bring out Publix fucking Lunchable meat and cheese, that's wild.
This date was July 25th. So I want to go to ChatGPT and ask ChatGPT what happened on July.
Okay, my question is all right, you look for a large sell-off. The thing has already gapped up completely. So the question is why are you looking at this for a trade? It's already reversed the sell-off for whatever reason. So let's see what she has. ChatGPT. Okay.
July 25th. Let's ask her.
She's asking ChatGPT why that sold off in a class. All right, I'm going to help out. I shouldn't help out fucking scammers, or whatever the fuck you want to call yourself. This is one of those things you have before you go into the meeting. You should probably know why the chart you're bringing up had the price action that it had. You don't ask ChatGPT in the middle of your class about why something. Never mind. People paid for this.
Amazon stock slipped approximately 28% decline wasn't due to a company-specific news, but part of a.
Oh my fucking God. Amazon stock fell 28%.
Pulled back in tech stocks. So nothing happened with Amazon. The whole just tech NASDAQ had a pullback.
Mm-hmm.
Somebody goes,
Oh, look at this. The Fed comments, news. It was news that made that pullback. So we had Feds talk. So whenever the Feds talk, it gets fucking crazy. So
how rich could I actually be? If people are paying for this, could I actually get rich doing this? Like actually giving people, I mean, I do it for free every day, but like people would pay for me to do like these classes of like how I get into a trade, why I get into a trade, and how I look at things. You think, am I doing this wrong? I'm not even talking about scamming people and giving them falls, like actually doing it the real way and just like renting out a room or some shit. They wouldn't believe you. They want fast money. Motherfucker, you want fast money? I'll give you the fast, but I'll actually give you a trade. I'll give you a fucking signal. I don't know if it's going to work out, but it's already got your money and there's no takesies backsies.
You don't know when I'm being in a trade when the Feds are talking.
You do not want to be in a trade when the Fed starts talking.
Just resubbed for 6 months.
Okay, tell me why. Is it because now 19 of the last 21 times that Powell has taken the stage for comments after the Fed decision, the market has fallen because his comments generally don't reflect exactly the way the Fed report was made? They look for changes in that. We see a reversal, and it's usually the question and answer. Also, this time was a little bit different. The stock market actually fell over 1% again for the 19th out of 21 times, or 23 times, or 22 times, whatever, from the time he talked to the end of it. But this time it did a little bit different. This time when it fell, it actually gapped back up and finished almost exactly where it was by end of day. So it was a weird thing right there. But why? Why don't you want to have a trade into the Fed? Or if you do, why don't you just take a volatility trade? But let's listen.
So you want to make sure you look at the news so you can know. They always give you an announcement like they're having so-and-so speaking at this time, this date, whatever. Don't be in a trade during that time, because if you're on a trade for a call, you know, because look at this big green candle and you're like, oh, it's a big strong candle, we're going to continue to go up. Then
what time frame is she looking at? She looks like she knows all about big strong candles. Okay, bro.
surprise, Feds talk, and then it drops.
What if you're channel you said?
This girl's asking questions. She said, so they cut out somebody else's question. It must have been really bad. What is the channel you say? Hold on.
CBC, CNBC News.
CN?
Yeah.
Is this a channel on the TV? Or?
Yeah. I'm so old school. Oh my god.
I am not good at this. I am not an authority on this. I am not, you know, I'm just an idiot with a camera. But how is this a real thing? How is it? This is just IRL pump.fun. The fuck is a supply zone? It's just a nice way of saying this is where buyers show up, or a lot of volume on the. It's basically a nice way of saying support. All right, supply zone. Okay, that's where when it reaches that one, we see a sudden spike in people buying. Right, the bidders are up. You know, a demand zone is just demand is where people want to. You know, it's just a different thing.
My supply up here.
I'm sorry. I mean, this is making me dumber. Demand is buy. Supply is the top. Sorry. Even this is making me dumb because I'm listening to her talk right now. Let's go.
So you're gonna go all the way back until you get the most recent highest high.
Yeah.
Okay.
And then
Did she just say that zone is the recent highest high? That's not a zone. That there was a catalyst that dropped that. A catalyst dropped that. You don't go and say the highest high is the supply zone. No, you would have to have it hit multiple points and see volume be very high at that level and selling happen for. Oh my, you know what? Who cares?
and the low. For me, it would be like
So we just pick the high and the low on any random time frame and call that the supply and demand zone. Okay.
this one right here.
Look at how they're actually locked in.
Yes, the 4 hour tells you so much. It's more clear than like any other chart when it comes
The 4 hour. I understand people can use it, but to say the 4 hours the most.
to looking at these key areas.
Okay.
What if I just created a free course? It would take 8 hours and just put it out there. Do you think I would put these people out of business, or would it just seem fake? It's not good because it's free. Because a course is stupid to do. I'm joking. I'm not putting out a course. Because how do you do a course? I mean, a course on what things mean. I'd call it more of a class. Like, on how to understand things or basic things in a way that you know, whatever. I can't tell you how to trade. I can't tell you what's going to go up and this is where you buy and this is where you sell and this is what you look for. The way I do it is fucking crazy. Okay, I have a weird brain, and I don't know why I what happened. But as far as just like, hey guys, this is what RSI means, right? The relative strength index. Basically, when it gets above this level, it just means that it's overbought, and that generally, based on historical patterns and the rest of the market, that this is what we call overbought. And if the RSI goes under here, it means that it's oversold. And here's your MACD. This gives you momentum. This lets you know that based on the buying and selling and the action that's happening and the volume of it, we're in an upward momentum or a downward momentum track. These are moving averages. This is your 9-day moving average, your 30-day moving average, your 180-day, your 60-90. And what happens is you're basically tracking how this trades on this. Why is this important? It lets you know that the momentum of the 9-day crossing of the 30-day means that we're on the downside, right? That means we're in a lot of momentum to the downside. Also, notice how this bounces off the 30-day moving average or the 90-day moving average. Why is that important? Because other people are also looking at it. Every time it touches that, it seems to bounce off. That's where people are comfortable buying. They like to buy there. It hasn't broken below, meaning that people really like playing this, and that's where they think the trajectory is going to go. Shit like that. Is that what I should do? Why does volume matter? This is the difference between the ask and the bid and the spread. Why you don't hit market order on a low, if you look at the liquidity. How do you look at liquidity? Hey, there's buy and there's sell, right? There's ask and bid, and there's not very many, and there's a big gap. Don't hit market order because you're going to get filled way above, and you're going to automatically be down, okay? Do you want to undercut the person doing the bid? Guess what? Look at the 50% range, minus 10%, put your bid there. Okay, because the person at the ask is eventually going to get tired of it, and they're gonna lower it, or somebody's gonna sell it market, and guess what? That's gonna be you because you're outbidding this guy down here. It's low liquidity. Don't do that. If there's hundreds of orders on the secondary, and you see a tight bid and ask spread, then you can hit limit order or market order because you're gonna get filled very close of there's a very, very low gap there, right? There's a 1 or 2 cent spread. But if the spread is $1 and it's 10% of it, never ever 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 hit the market order. Okay, because then you're going to get completely screwed on your thing. Same thing with options contracts. Look at the volume. How many contracts are being traded? What is the spread on that? Don't hit market if there's a big spread because you're going to get filled at a shit fill. Okay, I put crazy orders after hours on stocks, that I play, especially if they're like lower float stocks. I will put orders of 5%, 10%, 15% of an after hour because I know there's a chance some motherfucker's going to go in there and hit buy market order and they're going to get filled on my bullshit. It is what it is. You learn to play that game. Okay. That's how that kind of works. Like same thing with options contracts. I'll buy an option contract, and a few days later, if there's finally starting to get some activity to it, I'll just set a ladder of orders above the current ask, and if somebody hits market, boom, 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 I get filled. Right. The guy that bought my Amazon call yesterday, get fucked, bro. I'm sorry to hear about that. All right. I put that thing in, not you, it's somebody out there. I put that shit in. Okay. It is what it is. All right. I mean, you could do this stuff all day long. You could bring up indicators. You could talk about this. That's just teaching the basics, right? How to trade. I can't tell you. Here's how you trade. You don't. Course over.